Traders Club. Today's April 6th, 2018, Friday. Hope you guys had a good week trading this week. Welcome to the market update. Today we're going to be looking at Spider, Diamond, IWM, Qs, NXLF, and we'll call it a day. We continue to see some volatility here, which is expected and given the fact that the market has been seeing a lot of volatility this year. And something we've been talking about is 200 SMA here. We actually just kind of following up from the last week's update video. You can see that when was the last Friday? Last Friday was 30th. Okay, so it was right here, or 29, yes. So right there when we did a last market update video last Friday or last Thursday, or Friday I did, it was when the app market was there. And then you can see we got slightly below the 200 SMA here, just in case the market, just in case there are people who are looking at this so closely, slightly kind of dip below that. And then stay there, and then the next day we kind of had a little bit of bullish Rami type of candle. And then remember guys, a few nights ago everybody was going crazy, like the whole world is gonna crash down because the future was down 2.5%, right? And then we saw pretty much the biggest bull move since early March. I thought that was funny to see. It's just all these short-term traders, panicking and just running around like there's a fire in their house, and then out of nowhere, market just reverses on them like this just a few days ago, just shutting everybody down. Gotta love this market, because this market just knows how to do it, right? This market knows how to just make your life miserable. And this is the reason why you don't want to pay attention so much to shorter term time frame, because this market will make you go crazy trying to figure out what's going to happen tomorrow, next hour, next 2 hours. You probably just want to pull your hair out. So I always recommend looking at things in the longer term, understanding longer term, primary term picture. And then you can zoom in to kind of figure out what's going on in the minor term. But, once you understand the long term, you're not going to be shaken out in the short term. But today, what I do want to do, I don't usually go with the minor term analysis, but there's something that I thought it was kind of a important level that we're retesting today. I actually tweeted about the bullish divergence, I think last week, or this week, last week, I can't remember when. I think this week, a couple days ago. So there's a bullish divergence there. You can see very similar to what we saw back in early February, though this was a much more potent bullish divergence because you had that very well defined valleys there, and you see the lower low on the price section, and then higher low on that oscillator. And we did see pretty good move out of that, but we did see not as potent but bullish divergence here. And then we did see that bounce, and then now today we are pulling back. As I record this video, market should be open another 2 hours. So keep in mind, I'm actually recording this video intraday. And this 65-minute chart here, I think right now the pivotal level that I see is 259. This was a prior support, another prior support, and then it was all around it. You can see the prior resistance. So this is really a confluence zone, 259, 258-ish level, which is coinciding with the last level of my micro-term Fibonacci level. At the same time, I can even draw a bullish, micro-term bullish trend right there. Again, if you're so inclined to want to find out in the micro-term perspective. Again, this micro-term analysis could very well be nullified in the next hour or two. So this is a reason why I don't put too much faith to it or weight into it. But I thought that this could be the important level going into next hour or two. Obviously, by the time you get this video, market probably is closed. But if we do hold this level, towards close, when you watch this and we're holding above, 259.30 or so, then I think going into next week, this level, 259.30, 258.50-ish is going to be very important. Obviously, you can see that, let me zoom in here. We had a lower highs here, and then we created equal high. And this is an important pivot. Obviously, you can see that this is an important pivot. It was a prior support, and then it became a resistance. But obviously, this is not a lower high. This is an equal high, right? Got the high, lower high, lower high, and lower high, and that's the downtrend. So we're slowing down. As far as a minor term, micro term downtrend is concerned, we are slowing down. This does not mean downtrend's over in the minor term. It means the downtrend in the minor term, minor to micro term, it's slowing down. So for the buyers, what the buyers want to see this level getting protected from the bulls and then bouncing from here. And if we do see a bounce, maybe, I don't know in which fashion, maybe it's going to be something like this, then we may form 65-minute chart inverted head and shoulders. That will be the neckline, and that will be the initial confirmation. If we retest and then break out, and that will be the full confirmation of the initial that 65-minute inverted head and shoulders that is forming with this 65-minute bullish divergence, which is coinciding with that last level of my fib and micro term uptrend support. Again, this is micro term analysis. As I look at my 65-minute chart, this analysis could be nullified in just a matter of minutes and hours. So keep that in mind. But I thought I'll, because the interesting part is that we have on every single indices, we have on the Dow, same thing here. You can see bullish divergence, and we are retesting that important pivot right there. Same thing on the Qs. We have bullish divergence right there on the 65-minute chart, and we are important level of pivot, right? Prior support, prior resistance, prior support again. Same thing on the Russell 2000, right? Bullish divergence. Again, it's a 65-minute chart, so I don't know how much weight you want to put on. We need to see evidence of that prior resistance acting as new support. So that's the level to watch. And even on the banks, financial sector here, you can see, and we are also retesting this level, which is prior resistance acting as a potentially support. It's a potential support, right? It's a potential support. This was that prior resistance or prior support acting as resistance. This is why we saw that at levels of resistance. But this does have an equal high. So in the minor term, we are in a phase of that the minor term downtrend slowing down. That's kind of what we're seeing. And you can see that we're just pretty much consolidating here. So let's see how it plays out next week. So we'll follow up in early next week. If I see any new development, I'll tweet it out or something like that. You can follow me on Twitter at 2KKim, but we'll see how that plays out. Let's go to Dow. We did look at Dow on the 65-minute chart, but Dow finally retesting the 200 SMA. We didn't quite get there back in 8th of February, but now we're finally at that 200 SMA founding support there. We made, we made a attempt for a run. And we did fill this gap. I think that's a good sign. The thing about it is on the spider, this gap was not filled, right? So if I go back to spider right here, that gap, you see this gap, it still remains open. But on the Dow, you can see that this gap has been filled. So that's actually a good sign, in the minor term, because you have kind of kill this downside pressure, right? That's what the buyers want to do. Spider, there's still a lot of wind blowing to the downside for the fact that we have all these gaps open. That's something exactly we talked about back in, late February, late March. We talked about how in my market update video that these gap needs to be filled. If it doesn't, things gonna get hectic for the buyers because those are the downside pressure. So you can see not only we have these two gaps, we got this gap right here and this gap right there, and they both still are not filled on the spider. So selling pressure continuing, but good news is in the Dow, this gap has been filled. So I think the Dow could kind of hold up a little bit better here. So let's see how that plays out next week. We'll follow up. Russell 2000, obviously Russell 2000 doesn't have any gaps. And I think that's where Russell 2000 is showing much more relative strength, because Russell 2000 is actually still in a higher low vicinity. You can see that this low is definitely lower than this low. So we got the high, we're still in the intermediate term, we're still in an uptrend, versus Spider in the intermediate term, we're actually neutral for the fact that we have an equal lows, not maybe even slightly lower low. You can see if I go to line chart right here on the Spider, just slightly lower low right here. If I draw a line, you can see that, right? It's slightly undercut it, kind of shake a lot of people out. But Russell 2000 definitely showing relative strength by giving us that higher low, right? That higher low. So intermediate term, Russell is giving us, intermediate bullish sentiment, even though we are in a consolidational phase with this double top there. But let's see if we can hold this level here. Again, the 65-minute chart on the Russell 2000. Very similar look as a Spider, but this is a level, right? This is potentially a left shoulder, right shoulder level, right? We got the equal highs here. So obviously this chart showing us that the minor to micro term trend is slowing down, downtrend, as we cultivated equal highs. It is no longer cultivating lower highs, and I guess that could change. I mean, it could, if this thing continues to lower and then we start doing this, then that could be lower high. But as of now, with the tangible data that is at hand that we can see right now, that's kind of what we're doing. That's what I'm saying. That we are seeing that micro minor term trend is slowing. And then you can see these levels potentially could act as support. That's a prior resistance level. And then if we do see a consolidating level here and then break out, and then we start some kind of an uptrend here somewhere, then I think we can finally get out of this consolidational phase mode here. So let's see how that plays out next week. NASDAQ composite also showing us a pretty similar look as to Russell, is slightly higher low, slightly, not much, but the difference with the NASDAQ is the NASDAQ did make a higher high, made a new highs, and then it fell, right? Spider made a lower high before it fell. Russell 2000 made an equal high before it fell. Well, the NASDAQ made a higher high before it fell. I actually, for me personally, think this is a more bear signal to me, because it attempted to make a new high and trapped a lot of people, and it fell down, meaning it's potentially could become some kind of head and shoulder pattern, right? I think Spider, to me, Spider looks, looking at more of a longer term, Spider looks most bullish. I know you're thinking, what? How is it most bullish when we have a lower high K? But if you understand a big picture, if you understand how the market reverses it from a correction, this is a best scenario, because a lot of times what it's going to do is it's going to do that, come down, make a lower low, and then it has a much more probability of doing something like this. If you go back and study every single 10 to 20% correction on the market going history, this is a best case scenario where this thing go up, make a new low, go back up, and then we do something like that. But thing about Qs though is that Qs is actually made a new high, right? Instead of not like, so sentiment wise, as of today, Russell 2000 has the most bullish sentiment. But as far as like the best case scenario for a reversal is Spider has the best case scenario. Does that make sense? But Qs has the worst case scenario of a reversal because of this higher high. You see what I mean? So they're all different scenarios for different circumstances. And you can see because this could potentially be head and shoulder. But keep that in mind how many times, and I talked about this in last week, how many times NASDAQ will fake you out. This could be a head and shoulder formation. Well, that didn't play out. And it does that all throughout. It usually happens a lot in an uptrend. And you can see even right here, even more of a smaller scale, left shoulder head, and the right shoulder never played out. And we talked about this, right? And so you get the left shoulder head and then potentially a right shoulder. I would say that it may not play out. It will need a full confirmation. So I think NASDAQ is a little bit more, but it may or may not. I mean, we'll have to, you know, we'll have to see how it plays out then, and we'll continue to follow up. But I think the NASDAQ looks most vulnerable to me. And I think the Russell 2000 and Spider, they look better than the NASDAQ here. Let's go to XLF, and I'll call it a day, and I'll let you guys go. Yeah, same with the XLF here. We got slightly lower high here, which is, you know, best case scenario for this thing to kind of do something like that. But we are holding. We didn't, kind of like Dow, it didn't hit 200 SMA here on early February, but we are hitting that now. Again, that's the level that we have cultivating, currently holding or forming that 65-minute bullish divergence, and potentially inverted shoulder. This is a level we're currently holding as I record this video. It may or may not broken below it when the market closes, but currently that's the level that you can see where we're seeing the red, and currently that's the level that we're seeing the market trading at this point. So you can see that's the level right here, going back to Spider. So I think this is a level to hold. If this level is broken by the end of by the time you see this video and market is closed and the price is below 258.30, like 250, or let's just say 258, then either buyers want to see like a quick bullish gap up on Monday, or this thing could come down and retest the lows, and potentially this is just going to become another kind of a, you know, sideways move, or possibly make a new low. Remember I talked about it when I talked about Spider, that, which I've been talking about, that I am open-minded for another leg lower before getting back up, and that's a possibility. I think the worst case scenario for Spider is 248, 250 will be the worst case scenario, or it could come down to 253, which is that wick, the lower wick. And I think a lot of people are looking at this 200 SMA. We got a lot of supports here that everyone's looking at. So there's a good chance that, you know, like I said on last week's video, that a good chance that it needs to shake more people out, and it needs to convince everybody that this thing is going to break down completely before going right back up, right? So either we hold this level before retesting some of these levels and filling this gap, or there's a chance it's going to come down lower, kind of freak everybody out, and fully convince the public that we're ready for 1987 like crash, and we're on a Titanic and everybody's gonna drown and die kind of move, before we might see just bear slaughtering up move, where everybody will be scared and they're going to miss out. And same thing happened, man. You guys remember what happened in March? How many people thought that there would be a 1980 style crash is going to happen in March? It's going to happen in July. And then they all missed out this. And I believe something like that is brewing here. I believe there's another run coming this year. I still believe towards the end of this year, after we come out of this mess, there will be another run. It might not be as smooth as this, but I do believe that we're going to get into an uptrend, and I believe that the market could still close the year positive. So I think if you're a long-term investor, I mean, these are the levels start accumulating, not exiting. That's what I've been doing, especially for my long-term investing stocks. I've been adding, accumulating at these levels. And if we do see another leg lower, and when I mean at leg lower, I don't mean like, you know, another like flush down, but another like downturn, like decline, then I think those are the levels to buy the dip, and maybe even get into long-term calls on some of these indices, or if you're already holding some, adding more to it, and then hold the next several months. And I think this thing finally could turn it around. So that's my thought. And I know this is a level where everybody gonna be start trembling. It doesn't matter if they're gurus, so-called expert, whatever, right? They're gonna say something like, oh, if we lose the 200 SMA, man, if we lose this uptrend, all hell's going to break loose. All bets are off. Go through the videos and see what I'm telling you. They're all gonna start saying this same thing. I'm gonna tell you exactly what they're all gonna say this. We have a support right here, and right there. You got that support right there and here. and we got the 200 SMA, they all gonna same thing, right? Just go and watch them this weekend. They're all gonna say this, exactly this. This is line in the sand. If we break below this level, all hell's going to break loose. All bets are off, and this thing is ready for the plunge, or something like that. I'm going to tell you, and I will be the only one to tell you when or if we lose this level, when everybody start panicking in fear and hitting that exit button, trembling, that's when you start look for opportunity and start buying. Start buying. And we'll follow up. Right? We'll follow up next week. And we'll see how that plays out. So you guys have a wonderful weekend. And good luck trading next week.